So within this paradigm, I'm telling you that multifamily market fundamentals will remain strong. What's interesting is even now, and Dave will cover, I'll touch on this in a moment, but he'll go into deeper detail about where distress could emerge in multifamily. But what's interesting is multifamily is already corrected, and I'll get to that on another slide, but it's corrected within a paradigm that demand is incredibly strong. And that's rare. You know, it's rare that you say, wow, our demand's never been stronger and assets are going down in value. That's interesting. But there's two things to keep in mind. Number one, interest rates have gone up at the fastest pace, percentage pace in US history. Think about it. The 10-year note yield was sub 1%. Now it's, low fours. It got as high as 5. No one's seen that in their lifetime. No one's seen that in the history of the country. Fed funds even more so. Fed went from essentially 0 to 5.25. Can't even measure that. That's an infinite increase. And so this is a lot to digest. So what's happened? And I touched on this. Because residential housing hasn't repriced at all. In fact, it's higher than it was in 22 and 23. And this is driven by a lot of variables that Dave will get into. So I won't. But because it hasn't repriced, and because the mortgage has gone from essentially 3 to 7, and insurance has gone way up, and taxes have gone way up, you're left with, and that's the graph. The blue is the cost to own a home, and then below it is the cost to rent that same home. And so if you have a condo in Florida and you want to buy it, when you're done buying it, the HOA and the taxes and the financing and everything else, it's going to be $1,000 more a month than to rent. And by the way, if you look at the graph below, the bar graph, it shows that spread, which essentially was almost zero. And what happens, it's quarter by quarter, it spikes in 22, and that shouldn't surprise you because home prices kept going up, multifamily values went down, and interest rates spiked. And so you're just left with a countless number of people that can't afford a home now. And they might want to be in a home, but until either interest rates go back down or residential prices correct, they can't. We either are in a cycle that'll correct the other way, and you'll see the spread go back to normal, or we're in a paradigm shift where owning a home in the U.S. has now become, especially in the growth markets, Southeast, Texas, Southwest, but certainly New York, California, in those areas of the country, owning a home is now a privilege, and it'll be afforded to people who are in the top 10%. And if you're not, you're just going to be priced out. I don't think that's the case, but it could be. We could be literally staring at a paradigm. If that's true, then the demand segment for multifamily is enduring, and we're going to keep taking market share of people that can't afford a home. So I believe fundamentals will remain strong next year on the demand side.